You find a new trading strategy, test it with real money, watch the market move against you, and lose it all. The reason 90% of traders fail is that they fund live accounts before they have mathematically proven they actually have an edge in the market. To fix this, professionals rely on a strict 3-stage validation process to stress test their setups entirely risk-free. Before you start, you only need 3 things: a purely mechanical set of rules for Instrumentenstring, standard charting software, and a blank journal. Committing to a zero-risk testing environment is the only reliable way to stop acting like an emotional gambler and start making decisions like a data-driven professional. Step 1 is to write down your specific entry and exit rules while throwing actual dollar amounts completely out the window. This chart illustrates a risk unit, or R. Instead of dollars, we measure trades in factors of R. If a trade goes against you, it's -1R. If it hits your target, it's +3R. You also need a hard daily limit. If your account drops by -3R in one session, you shut your computer down. No exceptions. Trading exclusively in units of R completely strips away the panic of losing $50 or $500. It forces you to focus strictly on the process, keeping you from chasing losses or revenge trading. Now we move to stage 1 of the validation process, historical testing. We do this using a bar replay function to intentionally blind ourselves to future price action. This interface shows the bar replay tool in action. You select a random date in the past, and it masks everything to the right. Then you play the candlesticks forward to simulate real-time market movement. Your job here is to execute 50 to 100 simulated trades, strictly obeying the R-based rules you established in your journal. This equation shows how we calculate your net R. Out of 10 trades, if 3 hit your +3R target, that's 9R. Subtract the 7 losing trades at -1R each, and you are left with a positive net R of 2. This is your hard filter. If your net R is negative after 100 trades, the underlying strategy is broken. You must not proceed to the next stage. Testing through historical replay condenses weeks of waiting into a few hours of work. It filters out flawed systems before they can touch your real capital. Once your strategy proves profitable in replay, you advance to stage 2, the live, moving market, but using a paper trading simulator. Here, you will connect to a paper trading terminal and set a realistic starting balance. Now that the market is moving in real time, you need to practice metacognition. This means actively observing your own emotions, tracking whenever you feel the urge to hesitate or deviate from your rules. You then compare your paper trading data against your historical replay data. Any drop in performance usually highlights exactly where your emotions are interfering with your strategy. Stage 1 proved the math of your system. Simulated paper trading proves your psychological discipline to actually follow it. Only after both replay and paper trading yield a positive net R do you move to stage 3, funding a live account. When you go live, you start with extremely small capital, risking absolutely no more than 2.5% of your total account balance on any single trade. This flowchart demonstrates percentage-based scaling. Starting with $1,000, a 2.5% risk is $25. A successful 3R trade yields a $75 profit, bringing the account to $1,075. Because your total balance increased, your next 2.5% risk automatically scales up to $26.87. Conversely, if you hit a drawdown and your account drops to $975, the formula forces your next risk amount down to $24.37. Percentage-based scaling is your ultimate defense. It protects your capital from ruin when you are losing and mathematically compounds your momentum when you are winning. By following this sequence, you replace the anxiety of random guessing with the confidence of a professional relying on a mathematically proven edge. This chart sets realistic expectations. You'll see slight decreases in profit margins moving from replay to paper to live trading. This happens because of real-world friction, like broker fees, slippage, and psychological pressure. Your next step is clear. Halt all live trading right now. Open your charting software and execute your first block of 50 historical replay trades. The path to trading mastery doesn't start with throwing money at a screen. It begins by proving you have the discipline to survive 100 risk-free test trades.